Over the past month, the S&P 500 scared investors when it went down over 4.4%. However, in the last few days, the S&P 500 has rallied once again, meaning that over the past month, even though we dropped so much in value, we are still up by 0.45%. In the UK, things are looking so much better. We're officially out of recession. The UK economy grew the most it had in over 2 years. And as a result, the FTSE 100 is up by 6.44% in just 1 month. The FTSE 250 is another success story, and over the past month, it is up by 4.34%. So how does this affect my trading 212 portfolio? Over the past month, you would have heard a lot of doom and gloom stories about the S&P 500 and the economy in general. However, that never stops me from investing, and in this video, I'm going to show you exactly what has happened to my Trading 212 Invest account and my Trading 212 ISA account. Now, if you would like to sign up to Trading 212 and receive a free share while you do that, use the link in the description down below. Alternatively, if you've signed up recently and haven't received a free share, use my promo code JUBAIR and you should receive a free share. So this is my Trading 212 Invest account, and as you can see, my portfolio value is £14,313, and as a return figure, Trading 212 calculated anyway, which is not always the most, representative, I am up by £324.73, and that is a percentage gain of 2.32. Now, it is worth mentioning that this is my own portfolio. The way I invest will be different to how you invest, and I like to trade a lot, which also means the value of my portfolio goes up and down more. If I had kept my holdings long term, which I recommend everyone to do, the percentage return would be a lot higher. However, I document my journey every single month, so if you do want to check out my other portfolio updates, I will leave a link to the playlist down below. You can see that during this past month, there was a big journey. So at the beginning of the month, my portfolio value was 13,142 and I was £131 up. You can see that at some point I was down by over 2%. That was when the S&P 500 was declining. Everyone thought for some reason we are going to another recession, and then there was a lot of panic. But you can see in this video that I kept investing, kept adding to my S&P 500, and then all of a sudden it's back in the green, and right now I'm in the green quite a bit, which just goes to show that investing long term, staying in the game, is always going to be preferable to not staying in the game. And in the long term, we expect our wealth to grow instead of, go up and down by only £100. Now, if I click on this arrow here, you can see that my total account value for my Trading 212 Invest account is £14,914.40, and currently I have £600 in free funds. I topped up my account by around £600, hoping to get a good price in the S&P 500, but unfortunately, just the day after I actually deposited, the S&P 500 flew back again, so I'm still trying to wait for my time to put my money back. Of course, I do not at all recommend copying me in this video because, of course, I like to trade, I like to take on risk that I would say you should not personally take on. My portfolio is, like I said, how I invest. Some of these stocks will be very small amounts. That's because I am not a big individual investor. I'd rather put small money into something to see what I could have gained percentage-wise, but I'm not actually willing to take that risk with larger amounts of my money. So if I go into the history tab, you can see that this month was not the best for trading. This is because there was a long period of time when the S&P 500 dipped, meaning, of course, unless I put in new funds, I can't really make the most out of the volatility, because otherwise I'd have to realize a loss, which I am not willing to do. You can see that my current realized profit and loss is £2,373. If I scroll down, this is what I bought and sold over the past month. You can see that I bought the S&P 500, 42 shares here from the iShares Core S&P 500 GSPX. I also bought 71 shares here at £612. If I go in, you can see that I bought it at £8.53, which I'm really happy about. You can also see in the 12th of April, I did buy a few S&P 500 holdings, and this was at £8.76. I also bought and sold the FTSE All World and made a bit of profit there. For example, if I go into here, you can see that I made £57.16 in profit, and that was all the profit that I made that month, because then I bought into the S&P 500 and then it went down quite a bit. Now, quickly, in terms of free shares, I do not get any more free shares as I am on a different program. In the future, I might not show this screen because this is not going to actually increase at all. So now let's go through all my individual holdings. So first up, I have Walt Disney, and I have 0.12 shares in them. Over the past month, Walt Disney has not been doing too well. They are down by 9.73%. There are talks that Disney Plus is partnering up with other television providers such as HBO Max, and they're bundling certain packages in an attempt to actually compete with Netflix and Amazon Prime Video. This also shows the fact that, Disney Plus isn't doing as well as it ought to do, And as a result, and also maybe other factors, profits are down and the stock price is down too. So in my portfolio, Disney is still up by 16.99%, and that is a gain of £1.57. Now, Disney does now pay a dividend yield, and that is at a small 0.71%. As you can see from their income statements, revenue is increasing year on year. From a balance sheet perspective, you can see that the total number of assets is higher than the liabilities. And from a cash flow perspective, you can see that back in 2023, they were taking in more from operating, and it seems to be higher than the cost of investing and financing. However, the 2024 results are not here. And remember, this data is just at a glance. If you want to look more into the fundamentals of a company, I would suggest looking at other platforms such as Google or Yahoo Finance, or even if you want a premium option, maybe something like Seeking Alpha. Next, I have 35.1 shares in Vodafone. So over the past month, Vodafone has increased by 3.34%. This is a nice little increase. However, it is a lot less than, what they used to be. So in my portfolio overall, Vodafone is down by 23.88%, and that is a loss of £7.64. They do pay a very high dividend yield of 11.32%, which a lot of investors are cautious because it seems like a dividend trap, alluring people in with a high dividend yield, and then of course they can cut those dividends at any point in time. Quickly going over the financials, you can see that their net income increased from 2022 to 2023. Now, from a balance sheet perspective, you can see the assets are higher than liabilities. However, what they put in liabilities could be anything. So if you do want to find out, you should go into more financials to find out exactly what is put as their assets and what is put as their liabilities. In terms of cash flow, you can see that operating income stayed quite similar, down from 2022, and the cost of financing has also increased a lot. So next I have a small ETF holding here, 0.29 shares in the Vanguard Germany All Cap, also known as the German DAX. You can see that over the past month, they also have been doing really well, up by 3.83% in just 1 month. So in my portfolio overall, the Vanguard Germany All Cap is up by 8.82%, and that is a gain of £1.82. I wish Trading212 would have Vanguard stats as well, so we know what the dividend yield is at a glance and things like that. However, we just have to settle with the bare minimum here, unfortunately. Hopefully, Trading212 fix this very soon. So next I have the infamous Tesla, 0.17 shares in them. Over the past month, a very big roller coaster as always with Tesla, up by around 8% and then back down. Overall in the past month, down by 1.92%. So there was some hope towards the end of April, and that seems to have gone down since then. So in my portfolio, Tesla is down by 20.7%. That is a loss of £6. They don't currently pay a dividend yield, and from the balance sheets you can see things are looking good. Revenue is up, net income is up. Here are the balance sheets. You can see total number of assets greatly exceeds liabilities. And from a cash flow perspective, from 2022 to 2023, there was a reduction in operating income. So next I have Rolls-Royce, 33.5 shares in them. Over the past month, Rolls-Royce is up by 3.7%, not too bad. They don't pay a dividend yield currently, and we can see from the income statement, revenue is up from 2022, so is net income. From a balance sheet perspective, we can see a lot more liabilities than assets, maybe a lot of debt, and from a cash flow perspective, we can see operating income is up from 2022, and the cost of financing has reduced too. Next, I have 2.13 shares in PayPal. So over the past month, again, quite a bit of a roller coaster, just like with Tesla. Overall, they are still down by 4.48%. And in my portfolio overall, I am up by a small 3%. That is a gain of £3.13. And quickly looking at financials, we can see revenue is up, so is net income. Of course, no figures for 2024 yet. Balance sheets, we can see number of assets are more than their liabilities. And from a cash flow perspective, operating income seems to have been reducing. So next I have 2.32 shares in Orange. Over the past month, again, another roller coaster, down overall by 1.59%. In my portfolio overall, they are down by 5.24%. That is a loss of £1.17. They do pay a really good dividend yield of 6.81%, and as you can see from the income statement, revenue staying high, net income increasing slightly. From a balance sheet perspective, again, number of assets seems to be higher than their liabilities, and from a cash flow perspective, we can see that the operating income has increased from 2022 to 2023, and the cost of investing has also reduced. So next I have 0.09 shares in Nvidia. Over the past month, up by 3.26%, which is pretty good. In my portfolio overall, they are up by a staggering 204%. That is a gain of £43.71. They do pay the smallest dividend yield of 0.02%, which is just peanuts. And we can see from the revenue revenue, things are going parabolic. You can see the revenue increased exponentially. Net income has also increased exponentially too, so they're doing incredibly well. From a balance sheet perspective, you can see also the assets completely cover the liabilities. And looking at cash flow, you can see that operating income is in the multi billions, greatly exceeding the cost of investing and financing, which is also why Nvidia is doing really well in terms of their stock price. So next I have 0.4 shares in Nike. Over the past month, they are up by 2.18%. In my portfolio overall, however, they are down by 10.97%, and you can see that is a loss of £3.63. They do pay a small dividend yield of 1.58%, and here not complete financials, but you can see from 2022 to 2023, the revenue increased, net income decreased slightly. From a balance sheet perspective, you can see that the number of assets is slowly going down, and from cash flow, you can see the cost of financing has increased quite a bit. So next I have 0.49 shares in National Grid, and over the past month, National Grid is up by a massive 9.4%. So the green line here is my average buy-in price, and you can see this whole month it has been exceeding my average buy-in price. In my portfolio overall, they are up by 11.29%. That is a gain of only 56 pence. They pay a decent dividend yield of 5.12%. And as you can see from the financials, revenue is up a lot, so is net income. Balance sheets are looking good here, assets higher than liabilities. And from cash flow, we can see that the cost of investing is down too. Next, I have 0.07 shares in this Magnificent 7 stock, which is Microsoft. Over the past month, down by 2%. In my portfolio overall, they are up by 7.22%. That is a gain of £1.64. They pay a very small dividend yield of 0.73%. You can see from the income statement, revenue is up, net income very similar. From a balance sheet perspective, you can see that the number of assets is going up, and from their cash flow, we can see that the operating income does seem to cover investing and financing. So next I have 0.3 shares in Mercedes-Benz. So over the past month, not doing well at all, down by 10.28%. In my portfolio overall, however, I am still up by 9.55%, and that is a gain of £1.98. You can see that they do pay a very generous dividend yield of 7.77%, although that could be a dividend trap in the future. And from the income statement, you can see that revenue is very high, over 100 billion a year, and net income is also quite high. From the balance sheet perspective, everything looks good, and from cash flow you can see that operating is down from 2021, which is not the best thing ever. So next I have 343 shares in the Lloyds Banking Group. Over the past month, looking good, up by 2.22%. In my portfolio overall, I am up by a nice 22.35%, and that is a gain of £34.09. You can see that their income statement isn't full. A quick look at their balance sheets, you can see that assets and liabilities are very neck and neck. This is quite typical for any sort of finance or banking company. And from cash flow, you can see that since 2022, things have taken a tumble in regards to their operating income. So next I have my biggest holding by far. This is 1,463 shares in the iShares S&P 500. So this is the hedged version, and as you can see from the past month, here is a grey line. I was well below my grey line for the longest time. It was since April 2022 when things have really gone on the incline. So for this entire period here, things were looking very red for me. In my portfolio overall, I am up by 0.63%. That is a return of £80.11. Of course, I did some purchases over that time period, and I was therefore able to reduce my average buy-in price. You can see here during the past month, I bought 71 shares here, and towards the beginning of that month period, I bought a lot into the S&P 500, thinking it was a good price at 867, but of course it dropped even more after that. The great thing about investing in a Trading 212 Invest account is that I can keep depositing and reducing my average buying price whenever a stock takes a tumble. So I will never be dissuaded into continuing to invest when stocks tumble, such as big indexes like the S&P 500 or the FTSE All World. I have faith that things will recover, and by buying when things are cheaper, I will ultimately make more money when the price goes back up. So next I have 6.2 shares in Royal Mail. Over the past month, they have done incredibly well, up by 21.72%, which is a big shocker. In my portfolio overall, now they are up by 31.8%. That is a gain of £4.22. They don't currently pay a dividend yield, and as you can see from their financials, net income is down, so is revenue. From the balance sheets, you can see number of assets is going down, and from a cash flow perspective, we can see that operating income is also down. So next I have 23.17 shares in IAG. Over the past month, up by 3.22%. In my portfolio overall, they are up by 19.53%. That is a gain of £6.86. They don't currently pay a dividend yield, and as you can see from their income statement, revenue has increased near parabolically. Net income increased a lot too. From a balance sheet perspective, we can see assets and liabilities are almost neck and neck. Like I always say, airline companies probably have a lot of liabilities because of course all these refunds, all the cost of oil and all these sorts of things leads them to have a lot of liabilities. And from a cash flow perspective, we can see that operating income is still high, but the cost of financing and investing is increasing. So next I have 3.16 shares in H&M. Over the past month, quite a roller coaster again, down by 0.21% overall. In my portfolio overall, they are up by 10.59%. They pay a decent dividend yield of 3.88%. And from the income statement, we can see revenue is very high, net income is increasing slightly, balance sheets look fine, and from a cash flow perspective, we can see that they are still under the operating income from 2021. So next I have 0.298 shares in GlaxoSmithKline. Over the past month, doing really well, up by 11.01%. In my portfolio overall, they are up by a nice 35.52%. That is a gain of only £1.41 because of course I hadn't invested that much. We can see from the income statement that revenue has increased, however net income seems to be decreasing. Balance sheets again, number of assets going down quite a bit. And in terms of operating since 2021, they are down. I wonder why there. So next I have 2 shares in Direct Line Insurance. Over the past month, not too bad, up by 4.8%. You can see that it's just past my average buying price here. Therefore, in my portfolio overall, I am up by a measly 0.25%. That is a huge 1% gain. Dividend yield okay at 2.01%. And no actual real numbers here, so we're going to skip that. Next I have 18.1 shares in Deutsche Lufthansa. Over the past month, not doing too well, down by 6.79%. In my portfolio overall, not doing too well at all, down by 22.26%. That is a loss of £29.77. Dividend yield quite good at 4.46%. And here is the income statement. You can see revenue has increased really well, so has net income. From a balance sheet perspective, we can see the number of assets is increasing, which is really good. And from a cash flow perspective, we can see that operating income does seem to, at least on paper, exceed cost of financing and investing. So next, 1 shares in Deutsche Bank. Over the past month, another roller coaster looking profile, up by 6.16%. In my portfolio overall, looking quite good at a positive 29.13%. That is a gain of £3.12. Dividend yield quite small at 2.83%. And again, financials are not complete here. So next I have 1.5 shares in Delivery Hero. Over the past month, down by 24.57%. So not doing good at all. You can see that it is well below my average buy-in price now, which means I am at a loss. And overall, I am at a loss of 15.19%. That is a loss of £5.85. They don't currently pay a dividend yield, and there is no up-to-date financials here. Next, I have exactly 1 share in Carnival. Over the past month, not doing too well, down by 4.48%. However, overall in my portfolio, up by a nice 49.29%. That is a gain of £3.45. Dividend yield is quite small at 3.67%. And from the income statement, you can see revenue has increased quite a bit. Balance sheets look like liabilities are quite high. And from a cash flow perspective, we can see operating income last year was actually much higher than the previous 2 years. So next I have 21 shares in BP. Over the past month, you can see that I was at one point in profit above my average purchase price. However, since then it has tumbled, and overall they are down by 2.67%, giving me a loss of 3.66% overall in my portfolio. That is a loss of £4.05. Now they do pay a decent dividend yield of 4.56%, and you can see that revenue has gone down since 2022. And from a balance sheet perspective, we can see total number of assets higher than liabilities, and the cost of operating is still high, although not as high as 2022 when they were seeing really good profits. So next I have 0.37 shares in BMW. Over the past month, BMW has taken a tumble, down by 8.88%. In my portfolio overall, however, still up by 1.86%, but that is only a 60p gain. Dividend yield still looks good at 5.9%. Here is the income statement. As you can see, revenue is up, net income is down slightly. Balance sheets, we can see assets exceed liabilities, and from a cash flow perspective, we can see operating income has decreased since 2022. So next I have 1.37 shares in Aston Martin. Over the past month, doing really bad. What a terrible company in terms of stock price. Down this month by 16.3%. You can see it is well below my average buy-in price now. In my portfolio overall, it is down by 4.52%. That is a loss of 9 pence. They don't currently pay a dividend yield, and as you can see from their income statement, revenue is up, net income still negative, balance sheets, assets looking higher than liabilities, and from a cash flow perspective we can see that operating income does not seem to take care of the cost of investing. So next I have 0.02 shares in ASML. Over the past month, not doing too great, down by 5.34%. In my portfolio overall, however, they are up by 29.18%. That is a gain of £3.54. They pay a small dividend yield of 0.72%. However, from financials you can see the revenue has gone up quite a bit, so has their net income, and from a balance sheet perspective you can see number of assets higher than liabilities, and from a cash flow perspective you can see income from operating is slightly down. So next I have 0.42 shares in Apple. Over the past month they've been doing really well, up by 9.1%, and you can see that I finally exceeded again my average buy-in price of $176. So in my portfolio overall they are now up by 2.98%. That is a gain of £1.80 only. Very small holding here, sorry. They pay a very small dividend yield of 0.55%. And of course we know companies like this have excellent financials, very high revenue and net income. Balance sheets also assets higher than liabilities. And from a cash flow perspective we can see operating income is in excess of 80-90 billion. But the cost of financing is very high, but of course Apple is going to be fine with all these borrowing. They like to leverage a lot of debt. Next I have 1.24 shares in Amazon. Over the past month up by only 0.82%. In my portfolio overall they are up by 78.53%, which is very good. That is a gain of £82.08. They don't currently pay a dividend yield, and you can see from the income statement revenue is incredibly high, balance sheets also look good, and from cash flow you can see since 2022 operating income has increased very drastically. Now next I have 0.47 shares in Alphabet. Over the past month up by a nice 8.01%. You can see that Alphabet now reaches the £2 trillion mark, although check your sources, you know, when you're actually looking at any of these posts, because these are by random people and not anyone verified, things like that. So in my portfolio overall I am up by 29.15%, and that is a gain of £14.37. They pay a very small dividend yield of 0.47%, and as you can see from their financials, revenue is looking good, so is net income. Balance sheets also look extremely good, and from a cash flow perspective we can see operating income is around 100 billion, which covers the cost of financing and investing, at least on paper. So lastly but not leastly, I have 0.03 shares in AMD. Over the past month not doing too well, down by 9.11%. You can see that overall my return is still a positive 94.5%. That is a gain of a small 1.89%, my initial investment being only £2. No dividend yield, and as you can see income statement looks really good, balance sheets look amazing, and here is the cash flow down from 2021 and 2022. Now let's quickly go through my Trading 212 ISA and see what I've been getting up to there. You can see that my current portfolio value is £43,991.69. If I go here you can see for the first time, or what it seems like ages, I have zero free funds. Now I would have made a few videos over the past month explaining how I'm down by thousands of pounds. This was just another example of how anyone can sensationalize when the markets are going down, and if you keep investing chances are you're going to build your long-term wealth instead of losing it. You can see that over the past month at one point I was down by over £1,400 and then down even more, 1,500, but you can see I kept on investing. Obviously with an ISA I can't put any more money in because my ISA utilization is maxed out, and you can see just the other day I bought back into the S&P 500. Let's go into it. I have 4,995 shares in the GSPX. You can see that I bought this for an average price of £8.80, and I expect over the next week, obviously I can't predict the markets, but I do expect it to go at least up by 8 pence, and then I'll be taking the profit, and then hopefully it will go down again, and then I'll buy it again. If I go into the history, you can see that since opening this ISA now about 13 months ago, I have realized a profit of £3,191, so this is versus realized profit. In terms of dividends, I received £609, but you can see since last month I have bought into the S&P 500. Also, I've had cash when I sold out, and I'm receiving over £6 in daily interest from £44,000 in cash. You can see that in the 8th of May I sold my holdings, and here I made a small £111 profit. So last month my realized profit and loss was a positive £2,777. So over the past month I've made a realized gain of £414, which, if you ask me, in such a dire time during, you know, when the S&P 500 dipped by over 4.5%, I think that's pretty good. That's around 1% of my portfolio value. If I can get that every month, or at least 10 months a year, I can receive 10% a year. But of course that is at a huge risk to myself. Like I say, please do not copy my strategy. It is not a good strategy. You're much better off just holding onto the S&P 500. You're pretty much going to get the same gains anyway. I just psychologically like it, having all my money sold out and then just seeing the balance. It's only psychological, and I will probably lose out a lot of gains by doing that. So make sure to check out some of my other videos, and I will see you in the next video.